The secret must now be revealed. Rumors about the institution's interest in XRP have been going around the cryptocurrency industry for a number of years. This time, though, it's not conjecture. I have received an official paper from BlackRock that was leaked, and the information it contains totally changes our understanding of the future financial environment. According to a confidential document, BlackRock's, the world's largest asset management company with over $10 trillion in assets under custody, has quietly accumulated an incredible XRP valued $4 billion. It's not a rumor, I assure you. A multi-phase operation to integrate XRP onto BlackRock's next-generation tokenized asset infrastructure is described in the document. This is the strategy that the business has created. It might cause people to reconsider how money moves between markets, countries, and even asset classes. It takes a while to process the data. The same group that has ties to governments, central banks, and international financial institutions is investing a sizable sum of money in XRP. Regulating structures. Additionally, the global financial system is essentially owned by the same company. Nevertheless, we are all interested in the cause. What makes you utilize XRP? Why now? Furthermore, what secrets are hidden in that leaked letter that they did not want the public to see? The solution is supposed to be found in a document known as the Unified Digital Asset Liquidity Bridge. In accordance with the letter, an infrastructure designed to link tokenized representations of tangible assets like stocks, bonds, commodities, and real estate. Furthermore, XRP is the single settlement layer that serves as the system's backbone. This is where things start to go wild. The letter claims that for over a year, BlackRock's digital infrastructure team has been secretly testing Ripple's on-demand liquidity corridors. In cooperation with anonymous financial institutions in Europe, Asia, and the Middle East, these tests have been conducted. According to the company's internal projections, the new system could move trillions of dollars worth of tokenized value each day. Thus, the costly and sluggish SWIFT network will be entirely eliminated. For this system to be sufficiently liquid to handle the massive daily flows of capital, the price of XRP cannot stay at $50 or even $5. Simply put, the math isn't working well. Therefore, the letter concludes that XRP would need to trade at a least of $10,000 per coin in order to bridge that type of value in an effective manner. The magnitude of global tokenized assets and the liquidity requirements serve as the foundation for this conclusion. Let's take a rest there. $10,000 worth of XRP can seem like a pipe dream to some individuals. However, it makes perfect sense once you understand how settlement velocity and liquidity corridors operate. Because of its characteristics, such as its fixed supply and quick settlement times, XRP must have a high value per unit in order to absorb trillions of dollars in liquidity without encountering bottlenecks. Retail speculation is not the focus these days. Instead, it concerns the effectiveness of worldwide liquidity. Furthermore, BlackRock's is fully aware of this circumstance. The document claims that this is the initial stage of liquidity compression, which essentially means that they are purposefully restricting supply and circulation to increase currency efficiency. This strategy has a startling resemblance to the way central banks handle foreign reserves. Here's the real thing now. All of this activity is in line with Project Guardian, a Singaporean initiative backed by the International Monetary Fund, the Bank of International Settlements, and BIS, major banks and the IMF. Examining the interoperability of tokenized assets is the aim of Project Guardian. Ripple is already involved in that effort, and formal participants include JP Morgan, DBS, and Citi. Could this be a coincidence? Not at all, of course. The revelation supports the idea that BlackRock's acquisition of XRP is a part of a concerted global shift in finance toward tokenization. They are not doing so in order to turn a profit. They are building the tracks in anticipation of the next financial system. Furthermore, according to the document, XRP would act as an unbiased bridge currency that links tokenized funds, digital currencies issued by central banks, and traditional markets. Don't forget that the consequences are enormous. BlackRock does more than just display numbers on a screen when they tokenize assets. Instead, they are transferring tangible assets to the blockchain, such as stocks, real estate, and commodities. This indicates that real assets valued at trillions of dollars are swiftly settled over the XRP ledger and are moving across networks without any interruptions. Given the situation, it is not unexpected that Ripple has been working covertly with the World Economic Forum, the Digital Pound Foundation, and several central banks. Every last piece of the puzzle fits together. It is possible to link all of the relationships to a single truth. Right now, XRP is being positioned to take the lead as the primary liquidity layer for tokenization globally. That's not the end of it, though. The creation of the BlackRock's Digital Asset Settlement Network, or BRDSN for short, is an even more ambitious stage that is described in the letter. According to the paper, BRDSN will incorporate Ripplet into BlackRock's Aladdin platform right away. Around the world, governments, hedge funds, and pension funds use this same technology to manage their investments. Once the integration is complete, institutions will be able to use XRP as a bridge to instantly settle tokenized securities. Imagine Buru and trillions of dollars if XRP were utilized for all transactions pertaining to trading stocks, bond settlements, and exchange-traded funds, ETFs, such as Trilumu, Amaston Crew, and Nigener. It is a structure that will bring in a new era, not a dream. Look for the part that most people will leave out. This has nothing to do with speculation or excitement. Control is the matter at hand. XRP purchases are not BlackRock's purpose in an effort to turn a profit quickly. They are positioning themselves to take on a key role inside the new monetary system. It is evident from the leaked letter that XRP is a systemic liquidity asset, meaning that its purpose is to serve as a bridge rather than a substitute for other currencies. The International Monetary Fund, IMF, uses the same term when talking about neutral settlement layers. Are you a translator? XRP is not meant to be a rival to the dollar market. Everything that exists. This link is related to the dollar, yen, euro, and other currencies. This assertion is supported by the statistics. The fact that XRP is anticipated to serve as the bridge for even 10% of the tokenized asset market, which is projected to reach $20 trillion by 2030 would be sufficient justification for a price above 10,000s, however. The memo appears to point to something much more important. 90% of global value is transferred through tokenized networks. In a situation like this, XRP does more than just appreciate in value. Instead, it becomes essential for settlement liquidity's objective. It would be required for each and every tokenized security, foreign payment, and financial transaction. It is not a cryptocurrency pump fantasy. This is how the institution's financial system is designed. Let's start by discussing what everyone is thinking. Why hasn't this information been released previously? BlackRock's activities are characterized by speed, ease, timeliness, and complete perfection. The report highlights the fact that few months before the SEC's lawsuit against Ripple started to unravel, the acquisition of XRP was initiated. They knew what was about to take place. They had all the confidence that Ripple would win. And they doing it covertly, buying XRP illegally,